So Shavyfxhub, let's look at the dollar index. Very important. The price action of the dollar index reflected on the good buy by 5 a.m. And the current structure indicates that dollar remains on the bearish trend. So we're going to start from last year and get our price action right, as this is very, very much of great importance to us, that we know where the United States dollar is headed. Very important for any trader. Though there are sometimes deviations in monetary policy, and there seems to be one or two deviations, so it's okay. But under normal circumstance, there's an inverse correlation. So this is our supply roof on 4 hours in the month of February. Is another supply roof. This is a supply roof followed by break of structure and a retest. And price came back to retest it. A beautiful descending trend line is made. That's a free giveaway. Free giveaway buy idea. Break of structure, retest. Retest as a supply roof. Another retest. Break of structure, retest. So this is now your new demand floor. So if price comes into that structure, you expect it to buy. Dollar will definitely get here, most likely. This is the structure before we can have an upswing. Now let me explain something. See why I hold 4 hours to very high esteem. I hold 4 hours to very high esteem. It's because of price movement. That's a demand floor, break of a demand floor, retest, break of a supply roof, retest, break of a demand floor, retest. So the next thing we want to see is A possible retest of this floor, which is unavoidable. And if price does not sustain on that floor, then it breaks it and use it as a supply roof and sell further. There is a W structure here, a reversal price action. Maybe when buyers come there, based on a data print coming in on 60, dollar could find support again at 98.428. That's possible. It's very much possible. Trading is all about probability. It's all about economic probability. It's all about economic probability because what monetary policymakers will do, actually, nobody know exactly what they want to do. So you cannot be 100% certain, except there's an insider secret, which is an antitrust behavior, and I don't think any monetary policymaker want to involve in insider trading because of the consequences. So there's a probability that price might return into that structure and give us a buy opportunity. Another structure worthy of note is this last one, and after that, we're gonna rest and see what the market does. There is a structure at this level. So here we'll have let's correct this. Let's make it correct. So what we'll have here, it's we'll have here a break of structure and a retest. Retest of a broken supply roof becomes a demand floor and a possible break of structure. Break of a demand floor, price came here and a retest, and also retested it again. Break of a supply roof, price returns here and retest. Another retest, the broken supply roof, now a demand floor. The two possible buy positions we have will be based on this structure. You want to see price return into this structure again. So let's see the three levels which I have looked at. There is a W structure here, neckline, and the price might react at that level. Remember, trading is probability. So shortly after this, I'm going to look at a 10-year bond yield for clarity. So if price comes here and respect it, it will swing back. But there's already a bridge of structure at this level on the blue ascending trend line. So if that happens, and that reminds me on daily time frame. On daily time frame, I have an ascending trend line, which I almost ignored that. Almost. On a daily time frame, you have a trend line. So we have 3 points giving us an ascending trend line. So let's go back to our 4 hours. So there is a confirmation that if the index continue to behave the way it's behaving, there's a probability to come here for a buy. This is a daily ascending trend line.